What a day to have you. I mean, given everything that's happened in the last 24 hours, I couldn't be more thrilled to speak to you. What exactly happened yesterday? Was there a flash crash, and what prompted it?
Yeah, we saw up 20%, crash across many assets. It's kind of funny how correlated the crypto markets are to Tesla stock these days. But all of the cryptocurrency markets are disconnected. They are not centralized. There's not a monopoly in the way that there is for traditional equities, for example. So you've got to watch kind of many markets all at the same time. There are many different venues trading the same assets. And we saw across the board 20% price depression on many assets, and some assets even further than that on some venues, which may have offered margin trading, for example, which may have caused liquidations.
So, Jesse, do you think the flash, can you characterize it as a flash crash in Ether yesterday? And again, is that tied to Tesla, or is there something else underlying it?
Probably not tied to Tesla, but you never know what moves these markets. They can move, based on news, on whatever the meme of the day is. Really hard to know what's changing. It could be as simple as people deciding they want to pay for, take some gains for their taxes with Ether up so high. It recently hit a new all-time high, $2,000 a coin. So could be people wanting to take some money off the table. Really hard to speculate about what's kind of driving the market action.
Was it centered on Kraken?
So we saw huge dips across the whole market. It varied per market. There were some large dips on Kraken, which we think were probably exacerbated by the availability of margin trading on Kraken, the availability of some advanced order types like stop orders, which many other exchanges don't have. So we're not really sure yet why. We're in the process of investigating this, why the volume was greater on Kraken, or why there was more sell pressure on Kraken relative to its peers. You never really know. It can, as you said, it could be a single whale just decided to dump his life savings, on Kraken. And because the markets are not all connected perfectly, you can have a single market get out of sync with the rest of the markets, which are normally kept in sync relatively well by market makers. But there's not like a perfect atomic process where we're all sharing orders on the back end. So it does happen from time to time. But yes, we're still investigating.
Jesse, some customers have publicly asked for compensation because their margin positions were forcibly closed. What are you planning to do about that?
Generally, we don't compensate people for making bad trades. People all the time want to be compensated for making a trade they wish they hadn't made. I wish I made a lot of trades. I sold a lot of Bitcoin early. I wish I had held on to it. That's a bad trade. I wish I wouldn't have made. I wish someone would compensate me for that. But generally, we don't roll back trades. That's something that is really kind of taboo in the crypto space. Settlement finality is very important, I think, to the credibility of an exchange. So we would not roll back trades except in a most extreme circumstance where maybe there actually was a trading engine malfunction. In this case, there doesn't seem to be any evidence of any trading engine malfunction. It seems like trades processed accurately. And, that a lot of sell pressure just drove the price down, and people who were long got squeezed. And, from our perspective, that is perfectly predictable. It was within, normal market operations. Whether we want to help those people out, come out of pocket to help them because they didn't understand what they were doing, I think that's another question. We may end up doing something for these people. Again, we're looking into it, but generally we don't cover losses for bad trades.